Hang Seng is higher. It's the third continuous day of gains on the Hang Seng.
Packaging has been different now, so we are looking at now more as a BTG.
Get above the swing low of 24,567.
Goa facility that has received a voluntary action indicated.
The Nifty is absolutely flat. The Bank Nifty is absolutely flat. That's more like it.
Fundamentals of the company are very good, very strong foundation.
We have to face reality. Most high-frequency indicators have slowed very sharply.
The selling pressure continues. The Nifty is down 84 points.
ITPL Capgemini actually declared its results, and the outlook coming in from Capgemini was not too encouraging.
It's a mixed sort of a response that we're getting from consumer durable makers this time.
The advanced decline ratio largely helped by the fact that the broader end of the market, and especially if you're looking at the small cap index, that continues to remain in the green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that has been the day so far. It's been down for most parts. We are, of course, coming to you from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell, last hour of trade coming up. Markets down and out. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. And I know that a lot of the bulls out there would be missing the color green, so we're trying to do our bit. You can see the studio, you can see some of our clothing and attire. We're trying to throw in the dash here and there.
Yeah.
But yeah, I think for the markets, it's been a little disappointing because the week started off with some promise, right? We had the 2 positive days.
Yeah.
But yesterday and today, it's very clear that this sort of uncertainty and this, sell the bounce kind of a mindset is still not completely over and done.
Well, and after a while, the Bears are on top in this series,
Yeah.
right? It's been 4 series since they got any taste of good luck. And in fact, this series belongs to them. So they're the ones with the ammunition. And that's why we're seeing that the market is, as we speak, at the low point of the day. But very often on monthly expiry day, things can turn around in the last 60 minutes if either party gets very, very confident. And as we speak, there is aggressive call writing that's taking place. So you'll have to see whether they get stumped on the wrong side. But for the time being, the Bears are on top. And the problem is the Nifty Bank has broken that 51,500 mark. We're 150 points below that mark. So I think we'll have to watch that. 51,500 is the crucial Nifty Bank mark that I'm looking at.
All right. Not to, not forcibly trying to find a silver lining, but, it's largely IT. I mean, if you want to take a look at the pressure, the market is down 160 points, and 130 out of that 160 point cut in the Nifty is 4 IT services stocks. And I think that, now, of course, I mean, you can say, well, if you exclude this, market would be here, market would be there, and that is little meaning. But for what it's worth, market breadth is positive, strongly positive. I mean, about 1650, 1700 stocks are higher for about 1,000 stocks, which are lower on my screen. And as you can see, I mean, it's Infi, TCS, HCL Tech, Wipro. It is the IT pack which is doing bulk of the damage. Broader markets are doing actually much better, just in terms of what is up and down. So L&T is, of course, pulling for the bulls in a big way. 60 index points single-handedly from that one name. It's just that it doesn't have too much support from, many of the other Nifty stocks. For the Nifty Bank, as Nigel said, 51,500 is important. Basically, around 51,500, 51,450. It's a 20-day moving average for the Nifty Bank. Yesterday, we gave back about 1% of the 2% rally we saw earlier 2 days back. And today, we're giving back another 0.9% or so. So we're very close to it, about 100 points under the 20-day. And one can only hope that by close, either you're very close to it or maybe even slightly higher. So let's sort of hope things pick up. Today, by the way, of course, is the last hour, but tomorrow as well, we are trading Muhurat session, 6 to 7 p.m. markets will be trading. So there will be the opportunity to react. But of course, it's a very limited token kind of session, which usually we see. Surabhi.
Yeah, and the thing is that in the mid-cap market, the cuts are a little deeper than even the Nifty right now. The Nifty, you can still say, and that's a very fair argument that Prashant made, that it's largely IT-led, but the broader market is under pressure. The advanced decline ratio has been weak for pretty much the entire session today. We've got about 1,000 stocks declining, and the advancing stocks are right now about 1,400 or so. So one would want to see that these lines don't cross and they kind of remain where they are. in the best case scenario. Having said that, if you look at the 1% decline on the mid-cap index and talk about sort of some of the names that have come under pressure, some of them are, of course, earnings reactions, IRB, Manappuram Finance. Those would be some examples. There are other names as well. So, for instance, PNB and Info Edge, Memphis is losing about 4.5%. On Voltas, the negative read-through on earnings is still continuing. Second day running, that stock's also down quite a bit. L&T Tech Services. So even some of the mid-cap tech names, IT names, they are facing the heat for the time being. So, let's see if there can be some last half an hour expiry-related magic. I think the bulls will take that with both hands.
Well, that's right. And, the recent listing of Vare Energy, that stock, in fact, many expected actually be closer to 3,000 rupees on the listing day itself. But it didn't do that. But as we speak, volumes are very high, and that stock actually has moved to the high point of the day. So good up move is what we are seeing. So there are pockets where things are looking quite good. And just one more point, ICICI Bank, there was a very large trade. If I'm not mistaken, there's around 49 to 50 lakh shares that have got traded in the last 5 to around 6 minutes odd. So ICICI Bank, I'll be interested to see what were the participants out there. But, there's a very large, I think 50 lakh large trade on ICICI Bank. That's large in size. We'll try to find out more on that. Mitesh Thakkar is back with us, though. Mitesh, final 60 minutes before you get into, party mode, so to call it. How would you trade the index? Do you think this final 60 minutes will belong to the bears that have been on top in this series and even today?
So, Nigel, I think very difficult to guess purely because of two reasons. One, I think this 24, 180, 170 is an area where the trend line comes in and, we're right there. I don't know how it will pan out. The overall structure, which was looking oversold in the last 3-4 days, we got some intraday bounce back, so we're not exactly very oversold right now. So there is a risk of breakdown, and also given the fact that the structure is on the medium-term charts is negative, I think puts just a breakdown. So in that sense, I'll be trading with a lot of caution. We are avoiding long position despite the fact that we are near the support area, because let's see some kind of sign of reversal, before you want to venture into long positions. So that's a precondition for me to, look at long positions right now. Shorting, I'm not really sure, because again, some stocks are reversing oversold levels, some stocks are not, and the Bank Nifty, which has been good, has lost in the last 2 sessions. So the way I think one can take positions is that in case you break 24,150, try and do some bear spreads on the Nifty, not sure of an aggressive short right now. So that's the way we'll approach it.
Okay, what about stocks, Mitesh?
Yeah, so, I have a buy on Suven Pharma. I think that's a stock making a fresh swing high, and the pattern is quite positive over here. So keep a stop at about 1288 and look for a target of roughly around 1350 to begin with, though I suspect eventually 1375-80 zone is what I'm looking at. And a sell on Asian Paints with a stop at about 29.56 and a target of around 28.50.
Okay, all right. Got that, Mitesh. Thanks for the calls. We'll come back to you in just a bit. Nigel, not 60 minutes, final 120 minutes for us before
tomorrow.
The party can start. Yeah. No, I'm counting in. We have, by the way, a special edition of Editors Roundtable coming up as well. It's a big one. With a lot of special guests. That's what I'm saying. It's 60 plus 60. So it's 120 today, and then tomorrow we will do separate accounting for tomorrow. That's right. But anyway, I mean, it is fairly festive all around. So, the good cheer continues. Deven Choksi is with us. So let's take the conversation to him. Deven, happy Diwali to you. Thank you for joining in. May this be a very prosperous and happy year for you, your team in the office, everybody at home. So let's start with a pick, actually. Why talk about what's down today? Let's talk about, ideas, because I think the market after a long time has taken a pause. The whole complaint on valuations perhaps is sort of ebbing a little bit. Give us the one or two stocks if you were to buy for the next Samvat, which ones would they be?
Hi, Surabhi. Happy Diwali to you as well and to all the viewers. Well, I think the opportunities are going to come with the fall in the prices in the market, and that's what I think we have been asking for. So I think we have been liking few companies, and one among them is Tata Technologies. The company got listed last year. I think whatever it did in this 1 year period, it is now available at a corrected price post-listing. And that's where I think we believe that there is an opportunity out here. Both the verticals, the automobile vertical as well as the aviation vertical, both of them are showing a robust signs of growth in the business. And that's where I think we believe that I think this company could possibly sustain the growth, which basically it has initiated. Larger amount of revenue mix, I think, is coming from auto today, which is probably getting balanced with the higher amount of contribution coming in from the aviation over next 2 years' time. So we remain, I think, distinctly positive about this particular company with a complete end-to-end solutions on ER&D side, engineering R&D side, that this company is providing for their customers, including the JV that they have struck with the BMW, is something which is very interesting proposition that this company is going up. So it's again, I think, an investment idea, nothing to do with, I think, near term. Maybe I think one needs to hold the stock in the portfolio for at least 3 years to get the best benefit out of it.
All right, but what we'll do, Deven, is come back to you. But let me just quickly talk about the IT space, right? I referred to it. 4 stocks responsible for about 120, 130 odd point cut on the Nifty. The index has been recovering, but broadly 3% down from the morning, and that's a large one. So what's going on here? And is it sort of local? Is it global? Well, let me give you a hint. It's global. Vivek, of course, has been tracking this since the morning. Vivek, tell us.
Well, that's right. Yesterday, in the last hour of the trading session, you actually saw a peer of our IT company, Capgemini, that went ahead and declared its results. Now, remember, they follow a calendar year accounting standard. And what they've actually done is they've gone ahead and downgraded the revenue estimate for the year ending December. So what is it that they're expecting now? They are expecting a degrowth of 2 to 2.4% in constant currency. Remember, even earlier they had maintained that they would see a degrowth, but the degrowth was expected to be in the range of 0.5 to 1.5. So from a degrowth of 0.5 to 1.5, now they're expecting a deeper cut from 2 to 2.4%. Not only that, even the margin band that the company was anticipating, earlier it was 13.3 to 13.6. Now they've trimmed it down, so the upper end of the band has been cut lower. They now expect it to be in the range of 13.3 to 13.4%. In terms of commentary, they've actually said that they're continuing to see quite a lot of stress as far as the manufacturing vertical is concerned. And on the back of that, a whole host of analysts have taken note of this. And today the street have taken note of this. And no wonder then you're seeing quite a lot of deep cuts across the entire IT pack today.
Okay, all right. Thanks for putting that in perspective. Vivek, that's quite helpful. Let's take this back to Deven. Deven, so clearly it is this Gemini worry that spooked the entire street and how that company is interpreting the demand environment. But what is your sense? There's a lot going for IT, and many of the companies were talking about maybe some additional green shoots in the North American markets in the results season that just concluded. Would you buy this dip on IT or would you stay away?
So, Surbhi, I think the larger part of the confidence stays with the mid-tier IT companies who are having a display in their respective fields. The engineering R&D part, I think, is an important one, I think, which many of these companies are serving to their customers, dedicated customers. There, they have got a higher amount of visibility of business and at the same time, I think, the growth as well. So, in my viewpoint, I think this is an important area that one can possibly look at. The frontline IT companies are not bad, but I think their growth prospects are remaining a little muted at this point of time, vis-a-vis the mid-tier companies. And that's where I believe that I think one can argue for buying them to the portfolio. Current valuations may be slightly adequately priced given the market condition, but I would think that I think any correction in the price, in the journey next, I think one could possibly look around for buying some quality names in the portfolio.
Okay, all right. Deven, I wanted your view on Mahindra and Mahindra. We have some source-based information that's up for you on the screen. Mahindra's BEV is likely to cost under 35 lakh. I think they're going to be launching a couple of new EVs as well. So that's going to be important. And I think a couple of more details is what we have. They'll be launching its first ground-up EV on November 26th. And I saw that correctly. They're also going to make a couple of announcements on battery charging infrastructure. So, so that's the important piece of news that's coming. The stock is clearly reacting positively to that piece of news. We'll try to get in Parikshit and give us more details on that. But Deven, what do you make of the stock? Mahindra and Mahindra, in the last 18 months, it's done very, very well. Some channel checks suggest that tractor sales as well are picking up, besides this, SUV EV part of the business that's been firing. Your view at around 2,700 rupees?
Yes, Nigel. I think this is one company within the auto space which is possibly beating entire trend out here. They have got the pending order book to execute. They have collected money in advance. So to a greater extent, I think it's a very different proposition compared to many other OEMs in the PV segment. The kind of vehicle that they have been launching at a price point has certainly, I think, given this company relatively, I think, much fresher look by the investors, because I think the business demand itself, I think they are generating through this new launch of vehicle is quite impressive. Not too sure about the electric vehicles at this point of time, but do believe that I think there is a good amount of prospects going forward for companies which are offering the right price product into the market. And that's where I think in the right kind of appeal that product should be making. That is what M&M is probably asking for, and I think they're getting it. So in my viewpoint, I think the business-wise, they're quite good. And I think glad that you mentioned the point about the tractor business. The farm equipment business definitely, I think, is picking up. That is what we gather. And I believe that the rural demand is also going to add to it in the coming quarters. So certainly, I think the stock looks interesting. Though must say that I think most of it, I think, in price today. Maybe I think one will have to hold it for a little longer period of time to get the right kind of appreciation of around 15 to 20%. But otherwise, I think most of it is in price, all the prospects that we're talking about.
Okay, all right. That's a quick word coming through. Let's move on and talk about one of the biggest Nifty winners of the day, and that stock has been Cipla. Let's pull it up on the screen as well. It's been up about 6-7% right from the start of the morning. And that's because some good news came in. Yeah, look at that, 9.5% right now. That's because some good news came in on their Goa plant from the US FDA. Vinny is here with all the details. Vinny, tell us more.
Yes, so, surely a sharp up move that we're seeing coming in for Cipla today. At one point of time, it was up as much as 10%. This Goa facility has been under issues and challenges, facing challenges since 2020. So once this clearance comes in, that is a VAI that they received, voluntary action indicated, it means now they can make those launches that were in the pipeline from this facility, and especially a drug that is used for cancer treatment, that is generics, Abraxane, that has a market size of around $700 million. And it will be a big drug. Cipla could maybe look to be making almost $70 to $90 million from this drug on an annual basis. That is what analysts are highlighting. And there is less competition right now from this drug right now. When you look at it, Sandoz is the only player that has gotten an approval to make this drug in October 2024. Analysts also say that they expect a 4 to 5% EPS upgrade coming in for FY26. And the respiratory pipeline which Cipla has, that will help support the US sales growth for the company beyond FY26. The numbers that were reported in Q2, there was a bit of a miss that came in on the US sales. Now, this is something that will start supporting the growth. So, big positive for Cipla.
Okay, all right. Winnie, thank you very much for that. Devin, any thoughts on Cipla?
Yeah, Prashant, I believe that the company definitely, I think, is well positioned. If I have seen the result yesterday, I believe that the numbers, particularly coming from the European region, emerging market region and African region, they are in good double digits, except I think US and India where the numbers are relatively muted. But I believe that I think that given the new drug launches that they are having, and particularly in the area of specialty generics, I believe that both the demand as well as the margin part is definitely playing out well for this company. And the strategy that they've adopted in different markets of the world of offering, I think, the one unit, I think, for all the products, which is also acting well for this company for more than 15,000 products, I think, that they have. All these particular products, I think, offered through, I think, one channel is also working well for the growth purpose. So certainly, I think it's a good news. Maybe, I think, further things will have to be seen in the area of inorganic growth activities that they're talking about. But at this point of time, I think the results suggest that I think the company is probably showing better signs in the coming quarters, along with the new product launch that they're talking about.
Okay. All right, Devin, stay on. Let's just address that news on M&M. Their first EV launch. I mean, M&M calls it Born Electric. That's the way they address their entire portfolio. And this has been the next big talking point and perhaps the next big trigger for the stock as well. We have Parikshit joining in with some perspective. I think, Parikshit, both customers and the market have been very eagerly awaiting to see what M&M has to offer when it comes to this Born Electric portfolio. Tell us more about it, and what are the company's aspirations on the EV side?
Well, the Mahindra Group was lacking a strong electric portfolio for the last few years, wasn't it? Now we're told the company is all set to launch not one, but 2 new electric SUVs which have been developed ground up, and these will be launched on the 26th of November. And what sources tell us that the company is likely to use these cars to make their foray into the luxury electric vehicle segment. Their aspiration is, the Mahindra Group's aspiration is to take the fight to the likes of Mercedes-Benz, the BMW and the Audis in India. Now, the name of these SUVs will be unveiled next week, is what we are told. One of them will be a pure luxury SUV. One of them will be more of an off-roader. They will have advanced Qualcomm chips. That's what sources tell us. And they'll have several futuristic connected car features, ADAS, and safety features as well. As far as the pricing is concerned, they'd like to price it somewhere close to their current SUV portfolio. So we expect the pricing to be either around 35 lakhs or under 35 lakhs. So what's going to be different as to how these cars will be marketed by the brand? Well, we believe that a team of at least 500 to 600 specialized people have been hired by the Mahindra team. They'll be deployed across dealerships in the country, and their job will be to exclusively promote and explain the features of these cars to customers. Initially, the customers will be called by invitation only. Sales will begin early next year. There is a plan to begin exports as well. A charging infrastructure plan will also be launched by the Mahindra Group. So lots in the offing. So we'll have to stay tuned for the 26th of November. In fact, the month of November, we'll have some other EV launches from some of the big car makers. So we'll have to wait and watch for a lot of announcements then.
Yeah, exciting times ahead. And I think this is going to be a big one to watch from M&M. Parikshit, given that you said that they're going to try and compete with the best names in luxury here, I mean, including the likes of Mercedes, and you mentioned about 30 to 35 lakhs. I mean, what would the blended average, pricing of the M&M portfolio be now? Because, again, we're just thinking from a margin perspective, as this scales up, if they hit the right notes with these new products, then the overall margin for the company will start increasing, right, with these EVs as well. So what would the average selling price be now across the portfolio? And these ones, like you're saying, should be coming in at around 30, 35 lakhs.
You know, the average selling price of the Mahindra portfolio would be around 20 lakhs is what I would say. For example, the top end SUVs, the luxury SUVs from the Mahindra Group right now in the XUV and the Scorpio segment will cost you around 30 lakhs or a little more once you add all the regulatory costs together. The lower end variants would cost somewhere between 16 to 20 lakhs. So I would say the average selling price of the Mahindra portfolio is around 15 to 20 at this juncture. Some of the SUVs, the mid-range SUVs, have seen a drastic price cut. Also, that is also something we'll have to keep in mind. But considering that there are a lot of electric offerings in the market and Mahindra has to target exports as well. You have the likes of Hyundai Ioniq. Luxury car makers are launching a lot of EV options in India, and the government is also trying to sweeten the deal for EV makers like Tesla in the future. That's why the Mahindra Group wants to price their new EV portfolio very, very competitively.
It's an exciting market, and they have established absolute dominance in the SUV market very early on. Let's see what they come up with when it comes to the EV side. Parikshit, thank you very much for joining in with that perspective. Well, Deven, will thank you as well on that note. It's been great to have you with us throughout this year for all of the wealth ideas, and we look forward to more in the new Samvat as well. Have a very happy Diwali.
Happy Diwali to you as well.
Thank you so much. Well, we need to take a very quick break, but here's a quick reminder. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikant Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders as well. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. So you don't want to miss this opportunity.
Okay, welcome back. We got the market, which is down 140, so not very much change since 2:30. We're right there, 24,200 is where we are standing. We are at right now. Rohan Mehta is with us. He's CEO and Portfolio Manager at Turtle Wealth. Rohan, good afternoon. Thank you for joining us, and season's greetings to you. Happy Diwali. Prashant this side. I think first time that we're speaking on the air. Tell us a little bit about Turtle Wealth and what you do, and because I have the fact sheet, but would love to listen from you, because what I understand is you look at investing in turnaround businesses, but with a quant mindset. So just the process, if you can explain. Go on.
Yeah, hi Prashant. All the viewers, happy Diwali and New Year, and thank you for having me in the show. So 15 years, 17 years, we have made some processes where we have seen a great research that how we can make a long-term wealth and what are the credentials of picking up the stocks which can create an exceptional wealth creation point. And that's where our 16 to 17 years, we have invested in a lot into the quant making process, that how to pick up the companies. And in that, we have found that the best wealth creation happens into turnaround businesses, but turnaround businesses picked up not by emotion or by just intuition, but rather than purely on the data making process. And that's where we have created a specific quant into three areas of businesses, where is the selection, allocation, and reviewing of a stock. Because generally we talk a lot on allocation, or rather selection of a stock, but very less on allocation of a stock, and nearly about nothing on how to review a stock once it is allocated. So that's where our the fund works onto the process. We feel much ahead of a time, but I think so that's where the world is going onto quant-driven process rather than emotional-driven process.
Sure. If you can be a little more specific, say for example, the reason I'm asking is if there's a turnaround stock, usually you'd want, which means you'd buy in early, right? Something is down 30-40%. And things are changing. I mean, that is, or if you by turnaround, you mean something else. But that's typically what our viewers would understand with turnaround. But when you apply quant to it, which is, mathematical things like, well, outperformance to a certain index, I mean, those things won't show because, it's at a trough. The stock's not running away. It's not, no one believes it. So how does the two square? Go on.
Yeah. So turnaround doesn't mean buying up a stock at 20-30% downside. Rather than it's the different way around what we have picked up. To buy companies which has not done anything great from last decade, but at the same time the stock PAT has been rising from last 15 years. And we pick up the stocks only once the stock crosses all-time high. And that's where the whole quant changes the game. And if you've seen in last 30 years, the best wealth creation stock is when the company has not performed or a sector has not performed for a longer period of time. But at the same time, the revenues have come up higher, but the pricing have not been discounted. And there can be a re-rating in that sector. And that's where I can give you an example in 2022, could be an auto or a PSU in 2021, or maybe in 16 chemical story. These are the sectors where 15-20 years nothing had happened. And the first indication of a stock to do turnaround is when it does an all-time high after a longer period of time. And second indication is that when the company is making a consistent all-time high profits. And the third indication is that when the company does an outperformance to its index, because that's where we buy stocks, right? We want an outperformance to index. We don't want an underperformance to index. So there are a lot of credentials to this for sure. But if you look forward for what are the top three credentials, defining all the 500 credentials, what we have done into a research, we have found that these are the three key credentials to find out a turnaround story. I can name a lot of companies into the point, but rather I can put it on the sector. And the sector comes down a very interesting sector that would be auto in last 2 to 3 years.
Hi, Rohan. Good afternoon. Good to see you in. Nigel on this side. Good to have you on the show. Very simple one. From this Diwali to next one. What's the big bet you're taking? You can mention 1, 2, or 3 stocks. Our viewers will love it.
Yeah, first of all, being a quant, we don't take bets, we see the data. So I'll tell you something which is very different onto the show is we are taking a very big bet on silver. ETFs are not on the MCX side on the silver, but look at where the wealth has been, the value has been there into silver, and specifically in the quant side also, silver looks very well. Where our portfolio, we have 10% of the silver ETF. Also, in the same side, we have created something. We are looking forward for companies which are pure into the consumer durable side. Companies like Gillette. A company in the agro-organic side, AMI Organics looks very interesting. So if you're talking for three things, I think so very different. It's silver, Gillette, and AMI Organics makes a lot of wealth into, and looks forward for a good 1 year wealth creation story.
Lovely. On silver, let's take that point first out of the way. A lot of people are looking at gold, and gold has, seen a good run in the last 1 year or so. But now people are getting incrementally more bullish on silver. They're saying that ratio between silver as well as gold, well, that will narrow. So that means silver will catch up and outperform. Any targets you have on silver?
Generally, as a quant point, we don't have targets, but seeing that the value, we feel that in next 3 years, we should at least expect more than double of the silver. I would be not surprised if we can do it in next month also. But yeah, being fair into it, 3 years down the line, we can expect double of the silver. And also, we are taking a very best hedge to equities also, right? So if you see this month, Nifty 500 is somewhere around 7% down, and silver is somewhere around 8.5% plus. And that's where the hedging comes into the portfolio. Gold has done exceptionally well. There's no doubt about it. But silver would create for sure a larger value than gold in next 2 to 3 years.
The call on Gillette is going to be very interesting, and I'll track that closely, Rohan, because I remember Gillette in 2019, the stock was 8,000 rupees. And for the next 5 years, it did nothing. In fact, it eroded wealth. Yes. And in the recent past, I think the last 6 months or so, Gillette has seen a big rally. But if you look at it from that 8,000 rupee mark that it's on 2019, well, it's up only around 20%. Yeah, Rohan, you want to comment?
Yeah, so Gillette is a very interesting business. See, we all shave, and that's a man grooming brand. We talked with management with Gillette, and then we found the turnaround story, and they completely missed the man grooming industry, right? And that was been taken all by the startups. And look at what the back of the brands they have, and they are coming very aggressively into the man grooming industry with the toothbrushes and the shavings and the trimmers and the other man grooming industry. It looks superb, and see the numbers. 6 years, nothing has happened. At the same time, the profitability has gone at least 3x into the stock. And I don't have to talk more about the company. We are having the best management and best brand. And what a monopoly! You don't keep beard, so I can tell you that I can tell you without any doubt, the only shaver you will have, or the blade you will have, is Gillette. There's no other alternative. It's Tina. There is no other alternative.
I mean,
Prashant's thinking about Tina.
I said this earlier also, a long back, right? Warren Buffett, 20-30 years back, he was asked why he invested in Gillette. It was one of his talks. He said, I'm paraphrasing, I don't exactly remember, he said, men have one face, women have two legs. so there you go. That's, But anyway, it's great speaking with you. Appreciate you joining us, and wonderful chat. Have a good Diwali, and season's greetings to you, as always. Thank you.
Thanks.
Well, I think we're going to take a quick commercial break here. We're going to come back in just a bit from now. We'll look at markets. 30 minutes to go, but at least at an index level, there isn't very much by way of change. So we're down about 130, 140 points right there. Stay with us.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC TV 18.
Welcome back. Well, HCL Tech is the one actually that slipped a little bit more. That's moved to the low point of the day. And Sun Pharma in the last few minutes, it's lost its way a little bit. So Tech was as still under pressure. But I think even Sun Pharma has slipped a wee bit just in the last few minutes. Trent as well should come up for you on the screen. Actually, that was trading in the green. That's moved into the red. It's down close to 1.5%. But it's a good time to get a Nimesh to help us out with what he's picking up in D-Street Chatter. Nimesh, take it away.
And actually, a bit of expiry-led pressure as well. Again, there is selling, is what I understand. There is a market close basket selling as well at trading a fair desk and largely in the Nifty name. So clearly, from a flow perspective, it's a down day, and there is aggressive selling, is what I understand. The sector which are dragging the markets down is clearly IT on the back of Accenture, earnings and the guidance, and also to some extent financials are under pressure today. But the sector which has seen some bit of buying for the last couple of days is auto names, and for the second day running there is aggressive buying. And I understand Street is anticipating a strong festive demand sales, so that's something to track as far as autos are concerned. Technically, I think 24,200 is a level to watch on the downside. But again, the November series is going to be quite interesting and quite large as well. The big events to watch out for: the US election, the Fed outcome. We have the state election outcome as well, which markets will react to, and of course the MSCI rebalancing on the 14th. So, some big events to watch out. But I guess today's fall is dragged by FI selling as well. Of course, it adds to the expiries also, but there is selling in the large cap names from larger institutions today.
Okay, all right. Nimesh, thanks for that feedback. In terms of specific stocks, what's on your list today?
Well, the first name is AkzoNobel. Big move on that name and large volumes as well. It's generally a thinly traded stock, but the volumes on the higher side today. understand some China investors are active buyers. And also, while the parent has already indicated that they are looking at exploring options for their Indian company, I guess the street is sensing something to come very soon, and hence a big move in that name. So that's the first stock. Second stock is Genesis Industries. There was a large block in the morning trade, nearly 4% equity got changed hands. I understand a domestic AIF was a buyer in today's block. So again, disclosures there could be quite interesting. The third is NTPC. Within the PSU basket, while there is selling across board, NTPC stands out on the buy side. So there is aggressive buying from some large FIIs in today's trade in NTPC. And the last is L&T. We've been talking about why fundamentally the stock has been buzzing in trade, but there are very strong buy flows. And additionally, there is a Morgan Stanley tactical call as well that they expect the stock to rally on the upside post the strong quarter two. So that's the reason why L&T is holding on since the morning gains.
Okay. All right, got that.
By the way, Surabhi, let me tell you, Nimesh, usually when you walk up to Nimesh on his desk, he's on
the phone forever.
He's like this, always. Nimesh, how many phone calls today?
Today was not a very hectic day, Prashant, because half of the market participants seems to be on off and they're enjoying their Diwali.
Yeah, today would be more, I think, festive greetings, right? Yeah. Today there would be more festive greetings and less of khabar. Yes. But otherwise, I completely agree. You have to really wave and get Nimesh's attention, get him on the phone. Thank you so much for that, Nimesh.
Thank you.
See you in a bit. All right, let's quickly move on. We've got, I think, Mitesh back with us for some final calls as we're going to Mitesh. The market is still reeling under pressure, 121 points down on the Nifty. The mid-cap index, however, is looking better now. The cut, which was about 0.8%, almost 1% when we started the show, is now about 0.3%. So that's not too bad, actually, at this point in time. Yeah, that's the mid-cap recovery. It's quite evident at the index level, at least.
Mid-cap is recovering. Small cap anyway was up. The small cap index should come up on your screen. I think it was up about 1% or so. And pull up, there you go, 1.25%. Look, pull up the Nifty micro cap index. That yesterday was up 1%. I think it's up 1.5% today as well. And this is what I was talking about in the morning as well. The broader market, 2% now on the Nifty micro. This is the small, really small stuff below the small cap level. And this is actually starting to look a little better. And that is the reason why the market breadth overall, I think, should have also improved. If I can just get this up. Yeah, 1,800 stocks are higher and about 950 stocks. So almost 2:1 in favor of advances right now.
And just one more point, Prashant. With regard to these metal stocks, you have the inflationary data coming out of the US today and the jobs data tomorrow. Sometimes there is a play on metals. And Nalco is the stock that I've been talking about for the last few weeks. Quarter 3 and quarter 4 will be absolutely blockbuster because of the shortage of alumina. And that stock is getting bought on every dip. The markets have corrected, 7% from the peak. The stock is closer to the 52-week high. So sometimes there is this play on the US data that's going to come in and what the Fed is going to do next. And besides that, there are some of these metal stocks that will enjoy a good run in the near term. That's for the next year or so, because there's, as it is, an alumina shortage. And this is one of the few companies that are selling alumina. They're making less amount of aluminum, but they're selling alumina in the open market. So they'll enjoy.
Absolutely. And, we've been sort of, as Nigel said, putting that to you over the last many weeks now. Nalco getting bought. It's picked up from the day's lowest point. Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, good afternoon. What do you do?
Yeah. Prashant, I think, you're right. The breadth is very good, but what is dragging down the Nifty is the IT index. And despite that, I think the Nifty has just managed to hang on to 170, 150 zones. We'll take some shot on the IT side. STBT on TCS, keep a stop at about 39.75, look for target of 39.30. And the other one is HCL Tech, also giving a breakdown on the short-term charts, so could see more pressure. STBT here with a stop at about 17.75 and a target of around 17.45, 17.40 in the downside can be looked at.
By the way, I just want to point out that US futures are down quite significantly right now, about 1% lower on most of the benchmark indices. Most of the Asian markets also closed out negative, despite the fact that you had positive manufacturing data from China today, with the economy finally entering into expansion after 5 months. You had the Bank of Japan holding rates, nothing changed there. So Qs were all right. But the market is reacting quite negatively, the pre-open in the US, that is.
I think Meta and Microsoft as well will react to its numbers, and both of them in post-close, I think they were down 3.5 to 4%. So that will weigh as well on a couple of those headline indices.
And also the fact that the GDP print that came out yesterday itself, I mean, it was lower than estimates, dipping below 3%. The first estimate of the Q3 US GDP.
There is, by the way, Apple which reports today.
Yeah.
Later.
Yeah.
Amazon reports,
Yeah.
Intel reports, Uber reports. So it's a big
It's
one.
hectic.
Tracking any of them later in the evening?
We'll do it together, Nigel. All right, well, we won't be. It's just in case you're wondering, but we'll get you, of course, everything tomorrow as we come back for the modal session. L&T is what we want to talk about, right? Because good set of numbers. It's a big reason why the market is not selling off more, let me put it that way. 60 index points on the positive side coming in from that 6% move on L&T. Vivek is here with details. Vivek.
Well, that's right. So going into Q2, when you're talking about L&T, the expectations were quite muted. What was tempering down the expectations of the market? Number one, ordering activity, capex spends, government capex spends in H1 was very weak. Also, there were worries that there was moderation in capex as far as Saudi Aramco was concerned. And along with that, there were also worries as far as the margin, core margin guidance was concerned, given the fact that the company was still executing quite a lot of the legacy projects. And along with that, there were expectations that there could be a toning down of the guidance, especially as far as the 10% growth in the order inflows that was being projected by the company at the start of FY25. But with this particular quarter, the company has managed to go ahead and give a clarification on all of these parameters. Number one, as far as the core projects and manufacturing margins are concerned, still underwhelming, but it's at 7.6%. Up 20 basis points on a year-on-year basis. Order inflow for H1, quite above what the street was anticipating. Remember, L&T typically tends to bunch up the orders and only then puts it out to the exchanges at the end of the quarter. Guidance for all key parameters, top-line growth, order inflow has been maintained. The order book is very, very strong, continues to hold out above the 5 trillion or rupees 5 lakh crore mark. And along with that, a significant change in stance as far as bidding for thermal power projects in India is concerned. They are now bidding for the BTG portion as far as thermal projects are concerned, and that will help aid the order book. Now, when you're talking about the key highlights, order inflow is down 10%, but still very strong at 80,000 crore. When you're talking about the international orders, it remains very strong, 40% of the September order book, and this is against worries that that particular portion of the order book was actually depleting. Order prospects very strong, 8.1 trillion is what they're anticipating for H2, with domestic share of that particular order book expected to be around 57%. So they're expecting significant pickup in spends, both private as well as public, in H2. Brokerage is obviously enthused. We just heard about how Morgan Stanley has RTI, or Research Tactical Idea, on that particular name. Kotak too upgraded L&T today. They have upgraded it to an add from a sell rating. Strong print on execution, ordering as well as working capital, benefiting from new avenues of growth and a large, well-diversified order backlog. No wonder then L&T doing very well in the session today.
I think, Vivek, thank you very much for that. Amrish Baliga is with us. Amrish, L&T was one of your picks, if my memory serves me right, and not too far back.
Exactly, and still continues to be my pick. In fact, I have an immediate price target of about 38.50, slightly medium-term target of about 42.50, 42.60. But anyways, this is a long-term hold. I think this should be in the core portfolio. One should not even look at trading into, in and out of L&T. Just keep holding on. Maybe the next 3-4 years, I'll not be surprised if this becomes 2 to 2.5x.
Okay, so L&T is the pick. Got that, Amrish. Let's talk about the fall in IT stocks today. That's been sort of the biggest problem area for the market, right? Even now, many of them are down anywhere between 2% to 3-4%. What do you make of this, Amrish? And would you buy large cap IT, or would you look at niche tier 2 plays? Some of them, of course, have had phenomenal growth in the quarter gone by.
Exactly. And here I would surely look at the large cap IT names. Because whatever said and done, I think clearly green shoots are there, and the management commentary more or less has been positive. And I think we should see at least a decent up move in the earnings over the next 2 to 3 quarters, decent order flows. So I would surely go in with HCL Tech, TCS and Infosys at this point of time. Possibly we could see another 3 to 4 or possibly 5% sort of a correction from here. Utilize that to actually buy for long term.
Okay, all right. Amrish, just hold that thought. I would like your view actually on Vare Energies, because that one should come up for you on the screen. Now it's up close to 13% and volumes are very, very high. Remember when Premier Energy as well did list? Out there as well, we saw the stock go up 2.5x, I think, in a matter of a week. This one as well, in comparison to its IPO price, it's high. We have seen smaller issues in the SME space, like in insulation energy as well, which has a big order book now. That stock, I think, has gone up 80, 90 times in the last 4-5 years. So the space itself seems to be very, very hot, and it appears it has a long runway. Amrish, stay with us. We'll slip into a break, come back. We'll get a couple of calls from you as well as wind down the markets.
What should I call you? The comeback kids? The comeback men? Is that appropriate?
I think I like kids more. Young Turks has been on from 2001.
Yeah.
I think it seems like all of us have grown up together again.
I land up in DPS, that's where me and Kunal met.
What keeps or has kept the two of you together?
We have some manufacturing defect in the two of us. When you're at the bottom of the abyss, you find the courage to continue. And I think that's where our partnership, our friendship, our relationship has been so crucial.
ABCD, astrology, Bollywood, cricket and discounts.
Good memory, Shireen.
And not money,
13 years later.
We have to unravel the enigma that is Rohit Bansal.
To us, our individual egos almost stopped mattering. And the only ego that we had in mind was a joint one.
We have lunch every day together.
The markets are still down. They're down close to under 125 points, but the Nifty Bank, that's the one that's managed to pop up yet again. It's conquered that 51,500 odd mark. In the last few minutes, it's put in a fight. Axis Bank has cut its losses. That's doing well. The big boy, HDFC Bank, says, I want to end in the green. So that as well has recovered, and that's been doing a lot of the firefighting actually for the bulls. 1,800 rupees, that's the recent high out there. If HDFC Bank can move to that 1,800 odd mark, well, the bulls will be counting on it to break out, because otherwise it's been a bit of an underperformer. But the dip on that one clearly got bought into. So Nifty Bank doing quite well, bouncing off the lows of the day. Amrish, I wanted to ask you about the paint space that is heating up over there. We heard about Bidlas coming in. Asian Paints has not given any returns, the last year or so because of this threat. But, now it seems the street is digesting the fact that the new competition has come in. It's not had a very, very dynamic impact. And also input costs have cooled off. Your view?
And clearly, I expect that Asian Paints market share really will not go down too much from here because of the new entrants. I think they will affect more of the players at the lower end than leaders like Asian Paints. And Asian Paints has been the market leader for the last 55 years, and they keep doubling their top line every 5 to 6 years. And if you look on a 3-year basis, Asian Paints has been outperforming the industry growth with a strong volume CAGR. And they've been adding dealers in Tier 2, Tier 3. So there the demand traction is decently good. And also the other businesses like waterproofing business has a strong traction. Even the kitchen and bath business, which is decently small, but again, that's growing at about 25-30% CAGR. Like you rightly said, key raw material prices have stabilized, which is a positive. And there's a strong capex cycle underway at Asian Paints. In fact, the in-house decorative paints capacity is being expanded by about 54%. At the same time, aggressive product launches are being planned. Retail touch points are being increased by about 5,000 touch points every year. And their new brand, Neo Bharat Latex, is being positioned quite well in the mass market. So, there it will compete with the local brands and possibly take that market share. And in fact, if you see the distribution reach is more than the next 4 players put together. So, this clearly defines the size of Asian Paints. And now with the festive and wedding season in, I think that should benefit in Q3 also. So, I'm looking at EPS of about 66 in FY27. And with that, have a price target of about 39.60. Which is a good 30% higher than where we are right now.
All right, we leave it there. Thank you very much, Amrish, for joining us, and happy Diwali if you don't speak before.
All of you are very happy Diwali and a prosperous year ahead.
Thank you, and thank you for being with CNBC over the years. Appreciate it. Well, 120 points lower on the Nifty, 24,220. You basically, the market basically flatlined, not very much at all through the course. Actually, since, I'll tell you, since about 2 o'clock, nothing. Last 1.5 hours, up and down a few times over in a small range. But basically, you'll end about 100 points lower. And the bulk of the damage, of course, being caused by the IT services stocks. 4 IT stocks contributing to about 60-65% of the sell-off that we've seen. The small cap index ends strongly up. The mid cap index, decent recovery from the lows, and the Nifty micro cap index ends about 2% higher. And I think that's, small mercies in an otherwise sort of down and out kind of a day today. Nigel.
Well, that's right. From the broader markets, actually, let's pull up some intraday charts if that's possible, because you had a few stocks. Sri Renuka Industries towards the end, that stock, pulled back from the lows of the day. Easy Trip as well. The stock has been a big underperformer, but that as well pulled back a goodish bit. We just spoke about Nalco. Well, that one as well did very well in trade. So that stock, did pull back towards the end. But let's talk about the big movers. Pull up Tourism Finance, TFCI. The stock, I think, has seen a correction from 230, 240 to around 115. Today, the stock was up close to around 10%. So Tourism Finance should come up for you. Prudent Corp, we had the management with us. They were sounding very optimistic about business going ahead. The stock goes on with a gain of close to around 17.5%. LG Equipment, well, that stock as well was up more than 10%. Windlass Biotech, that's another stock that's up close to around 11%. The recent listing, Vare Energies, well, that one is up close to around 13%. So big move is what we saw. Newlin Laboratories, after the rally that we've seen, it continues to build on to those gains. So good going out there. Voltam Transformers as well, close to 7.5%. PG Electroplast, another one that's moved well, it continues to move up. So a lot of winners, Prashant, from the broader markets. And as we speak, as we wind down trade, there are a lot of shorts, I think, that are covering. There's an expiry-related factor that plays out. That's why the Nifty has recovered 50 points from the low point of the day, and the Nifty Bank has cut its losses by half to 250 points down.
Oh, no, absolutely. And, it's could have been worse, let's put it that way, right? So we go home with a cut of about 100-odd points as we wrap up today's trading session. Just a few more minutes to go, and then we are done for the day. Maybe just a few other stocks. Piramal Pharma ends about 6% higher. Rainbow Hospitals was a big mover. I think about back to highs, I think, for Rainbow. 7-8% up on Rainbow Hospitals. Reddington with a 6.5% it's pulled back so nicely on the last 2-3 days. 158 to 194 in, I think, 3 sessions flat. Tejas Network continues to do very well. So 1344. I mean, the highs were about 1500, so not quite there, but good pullback. KAI Industries had sold off sharply. Low recently was about 3700. Stocks about 40-50 now. That's KAI Industries. Prudent had a fantastic day today. So that did well. We had the management with us as well. Akzo Nobel India, 16%. It was on D Street Chatter with Nimish earlier. Anantraj Industries was up 7%. DOMS, the stationery company, big move, 8.5%. PG Electro Plus, I think we mentioned. Saregama, 5.5%. Interrug Builders, 9% gain. And that's done well since it made it to the market fairly recently. I mean, actually, it's a pretty vibrant screen if you look at the broader market and not just look at what the Nifty really did. It's a wrap on this edition of Closing Bell. Thank you very much for staying with us here. Editors Roundtable coming up next. We'll pick up on all the action in just a bit.